It is May 26th, 2023. This is the trade recap for the day using ICT concepts. This is episode 3. So, right here we have the progressive chart that we're going to be using for this whole YouTube series. This was the outcome of today. It is Friday, so it's the weekend now, and the market's closed on Monday for Memorial Day. So, probably the worst part of the week is the weekend because the markets are closed. But anyways, we were expecting to go bullish. This was my bias. I know ICT posted a video saying how he expected lower prices for ES because of how bullish dollar was. But to me, I stuck with the bullish bias because I know how dollar and indices like have a strange relationship right now. I noticed, indices are rallying with dollars sometimes, and it makes trades really difficult. But just stick with your bias, and I think it should be okay. So I'm gonna get rid of this, clean this up a little bit. We've superseded this SIBI here, which I wasn't expecting. I was just expecting price to kind of trail inside of this area and then reverse a little bit before picking up. But I guess if I am bullish on the weekly time frame, then this is to be expected, and I should have expected this. I just didn't expect the magnitude of how high we drew up. Not being able to take out that buy side liquidity, but then again, we did rally up quite a bit. So we're gonna go into the 1 hour here, kind of just see what price has done. Yeah, so I took 2 trades today. The first trade was actually really good, and I'll explain where it was and why I took it. And the second trade was actually also really good. Same methodology was used, and some concepts from my previous video using the RPL, the recent price leg, which is important when it comes to market structure, but just another fancy term. I'm sure there's a lot of terms out there that are similar. But yeah, here we have price just rallying off of this fair value gap here, and we also have order blocks that price is using in order to propel. And I think an important thing to note, right, we have these order blocks here inside of all these down candles, making these propulsion blocks, I believe. I'm gonna have to brush up on that video, but I'm pretty sure propulsion block is an order block within an order block. So get a really strong reaction here, and this is also during market open, or half of this because it's 9 and market opens at 9:30. But we're gonna go into a 5-minute time frame. I've been using the 5-minute a lot more recently just to get a better confirmation on certain market structure shifts and things like that, because it is higher time frame than the 1 minute. So right off the bat, obviously this was before market, but I noted it out how well price reacted off of this fair value gap here, and luckily because I had this, I could add confluence into going long, even with a Judas swing or a potential short setup that looked correct on ES. So here we go on the 1 minute, and keep in mind we are inside of the daily SIBI. So if I'm expecting a reversal, it's going to be inside of this range. So let's take a look here. Let's say market open was here, and I didn't see any of this price action. So if I woke up and it was 9:30 here, right? Obviously it's not, but if this is what the chart looked like, I would be pretty bearish on the day. But luckily, this is what price looked like, right? I was given the hindsight of price action that happened overnight and 8:30 market open, things like that. So we drop here, and it looks bearish, reacts very quickly off of this 5-minute fair value gap, right? We get a really nice break of structure to the upside. Market opens right here. So now I'm thinking to myself, right, what's gonna happen here? To some people, they might think this is a market structure shift, right? Because it displaces pretty aggressively and taking out a swing low, kind of that kind of mentality, I guess. And some people might think, oh, this is an ICT 2022 going short, trying to take out, sell side liquidity here, and then these relative equal lows, which is a reasonable target, and also targeting like the opening opening range gaps. I think that's what it's called. So things like that. So definitely a lot of reason to go bearish, but this is what I noticed. Once we, shifted or potentially reversed off of this area, I, I'm thinking I'm gonna go long here, and that I want to fill this volume imbalance in on the daily time frame because of this reaction on the 5 minute. There's Once this happens, I know that the draw of liquidity isn't to these lows anymore, because when I think to myself about reversals, what reason is there for price to reverse and where? And once I get that down, and the why and the how, whatever, it doesn't matter. As when I figure out the draw on liquidity, right? If it's not bearish anymore, where could it be looking to target? I'm not thinking here, right? Because this is like way too close to a range for price to just like consolidate, because I'm expecting a very large range day because of the position that we were in. So let's just go back to 30-minute time frame, just so I can mark out, certain liquidity. Like there's this high here, it's a great target. You have these highs right here, and then we weren't able to reach this high, but all this liquidity here that's stacked and imbalances, things like that. So to me, I was looking to go long, and I did. Let's go back to here. So right in this fair value gap, right here, this is my this is usually my setup that I like to take. I love to take. This is a unicorn setup, right? There's a high, a low, higher high, and then back into like this area. Sorry, low, high, lower low, high, and then inside of a breaker, inside of a fair value gap. So having confluence and narrative from this 5-minute market structure shift, I get this really like large aggressive move up, and I'm expecting higher prices. And I enter here right inside this first fair value gap, and then a little bit of drawdown, but the risk to reward ratio was definitely worth it. So I partial out up here after filling in the fair value gap because I don't know the reaction that we're expecting, and I also take 5 handles. So that's kind of what I've been going for recently. 5 points, 5 handles, and then I'm out, and then leaving a runner, and it does that very nicely. So a really nice trade to start the day, and I should have been done. But like I said, I've been struggling with over trading, but I'm really gonna zone in next week and take only 1 trade a day, and just get off the charts or something. So here I know a lot of people are looking to go short here, which is fine. This area right here is when dollars started acting very weird, and they were like almost correlating. The S&P and dollar. So whenever that happens, I know trades can go back like in weird ways. But if you did take this short, because it is a valid market structure shift, taking out swing lows, things like that, inside of this fair value gap, and if you put your stop loss above the swing high, it never gets hit. So you can target these imbalances here and things like that. So yeah, but that's not really what I was looking for. I was long. So this was the second trade I took on the day. This right here, right? So notice this fair value gap on ES. It gets somewhat violated with bodies outside of this range. And look at the time here, 11:24, right? So just note the around what time this was in this fair value gap. And I pulled these up beforehand. The same time, right? 11:25, 11:13, 11:25. These are also volume imbalances that are respected very, very well and very precisely. So using these as confluence, I know I can go ahead and take a long on ES. I don't enter off of this candle just because I wasn't completely sure yet. But once I saw a shift in market structure completely, so I would say like on this candle up here, um, you get a really nice fair value gap entry before price takes off. So if you entered here, right, it's 4202, oops, 4202, and you write it up, targeting these highs. That's a 8 handle run, 9 handle run, and then partial out over here. So it's a really nice trade. A little bit of chop for sure, but this is a balanced price range, and the bodies stay above mean threshold of this area, which is what you want to see when you want your trade to play out. So overall, really beautiful trades of the day, and definitely happy with how everything happened. And here we have lunchtime, kind of just in this range, taking out sell stops 1, 2, 3 times. So to me, this kind of look like the three drives pattern, but for sell side, which is a really great way to think about it actually. And then we have pretty sure we're inside. We're still inside of like this range here, so I'm still looking to go long, and I'm just looking at price action here, and I'm not pressing a button, nothing like that. But notice we have a swing high here, price drops. This is a swing high that I'd be looking to target. What do we get? What do we get here? We get the, sorry, we get, this up candle that takes out this swing high, and then a fair value gap inside of it where you could potentially go long. And, it rallies really well up until market close, basically, where price kind of just consolidates. And I think an important thing to note, let me see, look at my notes here. Yeah, so the important thing to note is, where are you expecting price to go in the AM session, and then where are you expecting it to go in the PM session, right? So I guess if you kind of zoom out here and kind of make it like a line graph, basically. Go to path. So here we have market open, price goes up, right? And then note lunch. Okay, this lunch is where price kind of just consolidates, and then price comes back up, down, and then finishes up. So this is a bullish AM session, and then consolidates during lunch, taking out sell stops with the 3 drives, and then a bullish PM. So I'm pretty sure that's something like an up close day, something by ICT, just talking about the nature of how AM and PM sessions work and the different types of outcomes on the daily. So yeah, just an overall very bullish day. So that's the whole candle there. Now I guess we can just kind of go back and predict, what's going to happen on Tuesday when market opens. We do have a lot of news this week, so if we're expecting anything crazy, I would say focus on that weekly volume imbalance that we've been targeting for the longest time. Right here, right? Liquidity void, a pretty large one. Looking to tap into that sometime this week, maybe. We do have a lot of red folders, so that's a potential there. So yeah, whenever I see a bullish candle here, right, and we invalidated the SIBI, the next candle, I'm expecting it to be bullish, and then maybe a retracement into the fair value gap that's created before, projecting even further up. So by next week Friday, this could be a viable area where price might be. But yeah, we just need to react off of this inversion fair value gap potentially once a new candle is made here, something of that nature, and then back down, and then yeah, actually, you know what? I'm gonna draw the candles just so it looks like I'm predicting something. Yeah, so let me just. So I'm expecting candles to kind of look like this. Maybe not that large, but something of that nature before wanting to expand higher up here. So this is my projection for this week. I'll leave those candles there more specifically, um, just because it would be cool if I was able to, or if we were able to correctly predict that above these highs and then into this volume or liquidity void on the weekly. Um, but yeah, that's basically that. I'm gonna try to start up my Twitter account, and I'm leaving that in the description. And then some people wanted like live streams over like the weekend and then sometime during the week. So I'll see what I can do about that. And I'm gonna get a Discord server started as well. But overall, this was the whole trade recap for the day. But besides that, I'm probably just gonna rest up, watch some, ICT videos, and then um, discipline myself to only take one trade a day. But yeah, that's gonna be it for this one.